we are seeing very significant investments into AI. The folks that are going to survive and prosper are the guys making, the shovels and the wheelbarrows. There have been rallies in a lot of these stocks. Some are probably overdone. On the other hand, you see NVIDIA and you see other players, their sales pipelines are pretty full. Investing is about taking risks and hopefully picking the right horse. That spurs innovation, that spurs competition, that spurs growth. And that's how the economy is supposed to work.
How has the SEC approving Bitcoin ETFs impacted the overall market structure for digital assets?
The SEC approving Bitcoin ETFs has kind of, reshifted the environment for digital assets. First, you've seen a massive influx of cash into Bitcoin. Investors who don't necessarily want to have a crypto wallet or, some other alternative mechanism to leverage traditional assets and get into Bitcoin and get them Bitcoin exposure. It's also, there's also discussions now on Ethereum ETF. And so I think what's happening is it's just opening people's eyes to the opportunities in digital assets. And I think that will continue moving forward. There are some challenges in some of the existing mechanisms and some of the existing players. We've seen problems with FTX, we've seen, Celsius, Three Arrows, and maybe I'm just a little bit more traditionally oriented, but when you look at traditional financial securities, you've got a demarcation of the broker and the custodian and the exchange and the market makers are all separate entities with an arm's length, ties. Digital asset world, there isn't. And to a certain extent, that makes it prone to fraud. And so, this move towards ETFs, continues the existing separations of duties within traditional assets moving into kind of the digital space. So it enables people to feel a little bit more comfortable that their assets are safe.
What will it take to achieve federal legislation over cash market digital assets?
There are big fights, down in Washington over who controls it. Is it going to be the CFTC? Is it going to be the SEC? Is it going to be a third-party entity? The SEC wants a lot of these, coins to move into the securities process, and they want to keep control over it. And they say that the existing structure works, which is segmentation of duties and traditional things within securities, which is very different than how a lot of the digital platforms work today. And so there's a big fight. And then you've got kind of more the Elizabeth Warren wing of the side that basically says, we don't want any of this stuff. We don't want investors in any of this stuff. And so there's still big fights, and I'm not sure that we have consensus on the Hill.
How will AI investing impact the different types of industry players?
You have 3 hours. AI will significantly impact almost everything we do. First of all, people are already leveraging AI on the data side, and there are algos that leverage AI to try to make better, order placement decisions and order scheduling decisions. So that's at the elemental level, and I think I wouldn't say it's easy, but I think that's, pretty straightforward. The question is when you get into, GPT and some of the more advanced stuff, then you're going to start looking at, okay, well, do I want to let this model run loose and invest my money for me? I'm not sure we're there yet. On the other hand, when you talk with traders and you talk with investment professionals, maybe the idea is, okay, well, I've got 12 analyst reports on this company. Let me throw it into, a GPT model and, summarize this stuff and try and get a feel for, okay, what's consistent, what's different. What does this guy say about this company? What does that guy say about this company? And that will then start building the database to start understanding what does all this written language and understanding mean, and what are the trigger points for these companies? Because, some may be, very different. Like, a car company may be very different than a biotech, and the drivers may be very different. And so you're going to start understanding those drivers, and then you can start cracking those drivers sooner. And maybe eventually in 5 or 7 years, you'll see some of the robos move to more AI. And then you might even, see more professional investors start moving to AI. And that said, there are folks like Rentech and some other guys that leverage a lot of pretty advanced technology whether it's AI per se or whether it's just, advanced statistical stuff to make investment decisions. But I think that will become more popular. And then the question then becomes is where do humans fit in? And that'll be an interesting thing we'll see. And thankfully, I'm not 20 anymore.
What is driving the growth in equity options, and can it continue?
Whether we continue to see tremendous growth in the future, I'm not so sure. It's kind of plateaued a little bit from what I understand. That we've looked at the data over the last quarter, and it's kind of stabilized a little bit. I think what's driven it over the last couple of years has really been, the shortening of the expiration and the daily expiries, the 3-day-a-week expiries, the weeklies. And I think you're going to see that continue and eventually possibly even get into traditional security settlements. Right now, all of the dailies are in cash-settled instruments because there's issues with expirations with physical securities and getting them back, and there's gaps, between the time that they expire and the time they get, the end of day. And there are all sorts of intricacies, with expirations on when you're talking about physical assets like, stocks.
What drives U.S. equity trading interest during non-traditional hours, especially Asian market hours?
We've seen Blue Ocean ETFs, which is the one that's open from, I think it's 10 a.m. or 10 p.m. to 4 a.m. grow. Actually, I was looking at their market share in terms of ATSs. Their ATS market share went up to like almost 2.5% in December. Now, I think a lot of that was driven by low-cost stocks, basically, the bets under $1 stock. And then now we've seen 24X, they put in their F1 to basically try to become overnight hours. And I think with that, the liquidity that is driving has the market makers taking interest. That'll make the market a bit more efficient with more volume. And I think you're going to see more and more folks, trading at 2 a.m. in the mornings.
Where might we see further consolidation in the U.S. exchange space over the next year?
I'm not sure we're going to see any consolidation in the exchange space in the next year unless significant things occur within the SEC's market structure rules. The major thing that's going to drive consolidation is the access fee rule. The access fee rule, right now, the SEC has mandated that if you want to take liquidity from an exchange, the maximum the exchange can charge is 30 cents per 100 shares, which is 30 mils. There's discussions as to, tightening that up. And if they tighten that up, right now, the consensus is somewhere between 10 and 15 mils. The SEC has proposed 5 to 10 mils. There's not going to be as much need for as many exchanges, I think, in the future. Even if the SEC comes in with something new, I don't expect anything to happen in the next year because it's going to take time to work through. And depending on what they say, there'll probably be lawsuits that'll get tied up in court. Maybe in 3 or 4 years, we'll see that number come down if the access fee changes significantly.